Sup traders, welcome to Failure to Displace. In this video we are going to take a look at this morning's London session on Euro USD. However, before we jump into the analysis, I want to refresh the process that we go through every single day. I had a comment on my previous video mentioning that things were getting a little bit confusing because I dropped down to a 30-second or even 15-second chart to look for a confirmation entry. The process basically stands for every single time frame. Price is fractal. What works on a 1 hour chart works on a 15-minute chart, works on a 1-minute chart, even works down to the lower time frames such as the 15-second chart as well. But to make things easy, we'll run through exactly what we're looking for before taking an entry, and then we'll jump into the session and go through the entry that I did find earlier on. So the process, we start off our day looking at the hourly chart. I'm looking for hourly points of interest. I mark out hourly swing highs and swing lows. I look for hourly fair value gaps and inversion fair value gaps, order blocks, and optimal trade entry as well for the current dealing range that we are in. I'll then drop to the 15-minute time frame and basically run through the exact same process, also taking into account previous sessions liquidity using the session liquidity tracker as well. I'll delineate all of these PD arrays onto my charts, and then I'll wait for price to move into one of these points of interest where I'll generally drop to the 1-minute time frame to look for my entry model. The entry model that I'm trading is the unicorn model. So to clarify what the unicorn model is, we will have a level of liquidity shown here. We've swept a level of liquidity. We put in a higher low and then a lower low, but we then break through with a break of structure here. We need to be looking for a large engulfing displacement candle that breaks through this structure level. So this displacement is what's showing us there's a change in price delivery. We're then looking at this leg here. So this price leg, we are looking for an order block that's failed. So if this order block fails, it should have been generally acting as resistance. So if price was to continue, we would have normally expected price to come up to this zone and then reject to continue further. However, as we can see in the example that we've got here, we didn't find any resistance at this level. We broke through. This resistance should turn to support. When price retests it, we are looking for a then reversal pattern, continuing higher, looking for higher levels of liquidity. So we're observing an order block in this area that fails. That will then become our breaker block. And then for the unicorn model, we are looking for an inefficiency, so a fair value gap inside our breaker. So if we get a confirmation of a fair value gap inside the breaker block with a large engulfing displacement candle breaking through structure, this is the unicorn model where we will look to get in on price action at this area, looking to then take price to the next draw on liquidity. Sometimes price does not come back to the breaker block. We may be too bullish, price will continue without tapping the breaker, at which point I will look for a fair value gap in this price leg for a continuation then to sweep out the draw on liquidity. So that's the entry model. The question I ask myself before taking any entries are, where are the big candles? So I need to see big engulfing candles before taking the entry. So with all that said, clarifying the process, let's jump now into the charts and start marking out where our potential entries are. So here we are on our hourly chart. We are looking at the London session opening at 2 AM. So we can mark out our swing highs and swing lows on the hourly. So we obviously have the most extreme low here, which was put in on Friday as our main sell side liquidity. We're getting a signal here for an hourly breaker block. Let's just ignore that because it's not something that we're going to be taking into consideration at this time. We have a swing high that was put in the gap time between the New York PM session on Friday through to the open of the Tokyo session, the Asia range, which would be buy side liquidity. You can see that we did have an hourly fair value gap at this point, which was respected. Price did move up in the Asia range, created another swing high here. So we've got an hourly swing high at that point, gain buy side liquidity before dropping away and into the hourly fair value gap. What I'm noting at this point is 50% of the hourly fair value gap has just been closed through. So this is a first indication that price may be looking to dig lower below this fair value gap. If 50% holds, it's a good signal that it's a strong fair value gap. When we start closing below 50% of a fair value gap, then that makes me feel that price may fill this completely. So therefore we could look for more confluences lower down in this range. So at this point, we'll just mark out our hourly fair value gap on the bearish side. And then we'll drop to the 15-minute time frame just to see what we've got on 15 minutes. So we can see how 50% of this fair value gap was respected, and then we are just closing through it now on this hourly one. What I'm noting at this point is on the 15-minute chart, we do have two fair value gaps lower down. Specifically, this lower fair value gap is actually aligned just with this order block, this bearish order block here. More confluence at this point. I'll take a note of this one. So we do have this fair value gap. We do have the slightly higher fair value gap. It's in the middle of the range, so I'm less likely to pay attention to this particular fair value gap. I would prefer the lower one to get hit into this order block. In fact, looking more closely on the 15, we do have a balanced price range at this point. So you can see here we had a bearish fair value gap. And then it was closely followed by a bullish fair value gap. So where these two overlap, this is a balanced price range. These are highly sensitive areas. So if price does retrace back into this area, tapping the BPR, you can often expect a strong reaction at that point. So we'll take a note of the BPR as well. We'll highlight this 15 on it. So I'm less likely to be looking at a reversal at this point into this fair value gap because it isn't aligned with the order block. So this is definitely the more prominent one. What I will say, however, is we do look to be creating equal lows at the Asia low here. We do have the Asia swing low on the 15-minute time frame at this point. So this would give us a sweep of sell side liquidity, sell side, into an inefficiency. Let's take a look at where we are in the actual current dealing range. So to mark out our dealing range, we need to go from the current low up to the high that was put in. Using our fib tool, this will tell us where premium and discount is and optimal trade entry. So these are our fib levels here. Anything above the 0.5 fib, so 0.5 is 50% of the range. Anything above is a premium, where ideally you would be looking to sell, and anything below the 0.5 fib is in a discount where you would be looking to buy. So we're looking to buy low and sell high. Optimal trade entry 0.618 and 66 is the kind of golden zone area, which actually falls perfectly in line with our fair value gap as well. This upper fair value gap is just crossing over the premium discount area. So if we're going to be looking for longs for a continuation of this particular move, really we want to be dropping into the discount area and then looking for our continuation higher. If we continue in this range, we could potentially be sweeping the highs, looking for a reversal. But this was an hourly fair value gap, if you remember. But what we can see inside this hourly fair value gap, so we've traded through at this point, we've respected the 50% and we're rejecting away from that fair value gap. You can actually see we've created relative equal highs here. We've got some buy-side liquidity, and this buy-side liquidity is going straight into an inefficiency. So we have a bearish fair value gap at that point as well. I'm going to refine this into this bearish fair value gap. This fair value gap is in the new week opening gap. So this orange shaded area is created by the session liquidity tracker. So links to all of the indicators that I use are down in the description box below, along with a quick video showing the various settings that I've got. Our session liquidity tracker is showing us untapped levels of session liquidity, which are aligning with the previous levels we've already marked out anyway. But it's also showing us this new week opening gap. This is where we closed on Friday and then opened up on Monday. There was a gap in price. This orange shaded area is generally a very strong draw on liquidity. So you can see price has been tapping that and respecting it. Fair value gap is inside the new week opening gap. So potentially we could sweep lower and then come back into the new week opening gap to fill it completely. For a trade thesis, for the going into the session, I'm kind of neutral. I'll take longs or shorts at this point. I don't have a higher time frame bias here. I would either be looking to enter on a sweep of sell side liquidity into an inefficiency, preferably coming down into a discount of this range before looking for a long trade. We could potentially come up into this inefficiency for a continuation of this bearish price action, at least taking us into a discount where we could offload that short position and then potentially get a reversal if that does set itself up. So my points of interest really are sweeping this buy side here or sweeping this sell side into a discount before I'd look for a long position. So we're going to drop onto the 5-minute time frame now and start scrolling through price action and see what we get. So say the session is going to open at 2 AM. Just showing red folder news on TradingView. However, this isn't red folder news on Forex Factory, which is what I primarily use. So I'm ignoring this. So price does immediately take out this sell side liquidity. So what we're looking for at this point is we've taken the sell side. Are we going to come into a discount for us to take a long position? So we've just tapped into a discount now, so we can drop onto the 1-minute time frame. And now we are looking for our entry model. You'll see these extended grey lines. So this is the open of a macro. So we have just tapped into a discount at the open of a macro. So inside a macro, price will often seek liquidity. And drive with displacement, so we can expect additional volume inside macros. 245 is an area that I'd be interested in looking for a trade. So I like to try and use the open of 15-minute candles as additional confluence to an entry. So we are breaking lower. We've filled straight through that fair value gap, so that 15-minute fair value gap hasn't held. And we are displacing lower. So this grey line that we've just tapped now is the optimal trade entry, which was in that lower fair value gap that we mentioned at the start of the analysis. So this would be a good area for a reversal. 245, so we'll come into a new 15-minute candle as well. See if we get a strong buyback. Nothing at the moment, so we had an aggressive move down. We can expect a little bit of consolidation at this point, maybe 15 minutes or so of consolidation before we can look for a potential reversal. Let's see what we get. Digging deeper, 50% of the fair value gap has just been tapped. You see how well price is respecting this fair value gap. And then a strong move through. So let's just turn on our indicator, which is our breaker block indicator. Now I can see this manually that we do have a breaker block at this point. But the indicator is confirming this with displacement as well. So if we're looking at price structure, we put in a low, we put in a high. This is the low that broke that low. We then put in another low, high. It's not broken that high, so we've got no change of character. Right down to this low here. Continue this on up to a high, to a low, and then we have broken that high there. So that's our change in price delivery. This is our break of structure. And you can see that we are breaking structure. Hang on one sec. Breaking structure with displacement. So these up close candles, are specifically this candle coming into the open of the new hour as well, is significantly larger than the candles around it. It's closed through this structure with strong displacement. So it's not like a weak close. So we do have this now last up closed candles. So the breaker block are the last up closed candles before creating the new low. It's the highest up closed candle is the actual breaker block, which is this particular one that the indicator is marking out. However, I will mark all 3 consecutive candles as the actual breaker block, because on a higher time frame, all 3 of these will be one breaker. And then we're looking to see if we get a fair value gap inside this breaker for our entry model. So we have displacement, we have a failed PD array, we have closed through a break of structure with displacement. And we've left a large fair value gap. So we've got a large fair value gap at this point between candle 1, and candle 3. Let me just move this so we can see it. We have a fair value gap between this candle and this candle here. Obviously the fair value gap is overlapping the breaker block, so this is a valid entry, and we are coming into 301, so this is the open of a 15-minute candle. So this is exactly what I want to see. We've tapped optimal trade entry, we've had an aggressive buy, aggressive reaction off optimal trade entry, breaking through structure with displacement, leaving our unicorn entry model. The entry will be at the top of the breaker block, so tap of the breaker block. Stop loss will be just below the low by a couple of points, so 6.8 pip stop loss. Take profit 1 would be logically this swing high here, I would say. See if we get tagged in at this point. So this was like the example that I showed you right at the beginning. Price hasn't come back and touched the breaker block. The breaker block doesn't get tapped every single time. So you can see we traded through that 15-minute fair value gap, traded back through the 15-minute fair value gap, respected the 50% of the 15-minute fair value gap, and we are now reaching higher. We've swept some liquidity here, so really good strong move higher. Again, respecting 50% of that fair value gap, so we have gone past 315. So let's move to 330, see if we can get an entry around 330. So we haven't tapped this, so this entry is no longer valid in my opinion. We've moved too far away. We've already swept liquidity, so I'm going to want to see another entry now higher up in the range, showing me that there's going to be a continuation to higher prices, potentially taking out those relative equal highs into that bearish fair value gap that we highlighted. We pull back into this fair value gap. Again, we're looking for a confluence around the open of a 15-minute candle. Kind of building liquidity there. We've gone through 330, there's nothing there. Go to 345. So we're kind of building a consolidation zone at this point. We have buy side up here. And we have sell side here. So we are just operating inside this range at the moment. This big black line up is delineating the open of the 403 macro. Kind of hovering around the 15-minute fair value gap. Relative equal lows at that point. There's nothing at 345. Sweep of the low. So we've got it here. Fair value gap. Larger order block. Engineered liquidity above a fair value gap. We have an order block at this point. We have a slightly smaller order block, which is what created the fair value gap just below that. So it's kind of internal to this larger order block area. So we've had a sweep of liquidity, and then we are going to be looking now again for some kind of continuation higher, aiming to take out the relative equal highs in to that fair value gap that we identified. Digging a little bit deeper, coming up to the open of the macro now. So this is 358, so this is the ideal time that we would look for an entry. We're looking for a nice displacement candle into that middle order block here. Larger candle at that point. Oh, it didn't break structure. So the open of the macro, we get the displacement candle through structure. So this is the break of structure. Closing through that with a large candle, so a large engulfing candle. Our breaker block is down here. So this is the last up closed candle. It created a swing high. So let's just make sure that we get this right. We had a low that went to a high, then created a lower low. So this is the candle that swept this low, that created a high, created a lower low here. So we swept that low, and then we have displaced through this here. This is the last up closed candle that created the swing high, that created a new swing low. Our breaker block is there, which we were then looking to get in on the action for a continuation higher. We need to see a fair value gap in this area. We've got one just in there. So we can see candle 1, candle 2, candle 3. We've got a fair value gap just in here. So this is our unicorn entry, breaker block with fair value gap. So we want to see a pullback into this area then for a continuation higher. So it's the exact same setup that we were hoping for lower down in the range. We're obviously jumping on now because we've seen displacement to the upside here. We didn't get tagged in. We then created a range, so a smaller range, building liquidity here. We've swept the low of the range into an order block, balancing a fair value gap, and then we've had again displacement to the upside, showing us that the buy program is still on. We do have clear buy side liquidity above us, so we've got the current session high there, and then we have those relative equal highs in the new week opening gap into a 15-minute fair value gap. So our entry will be at the top of the breaker block, stop loss just below the breaker block by a couple of points, so kind of 2.5, 2.6 pip stop loss. So again, really important if you're going to trade with this kind of precision that you have a broker with really tight spreads. Otherwise, your spread's just going to take you out here. Brokers that I use are linked down in the description below if you're interested in checking them out. TP1 is going to be taking out the session highs. 3 are at this point. If we break this level before getting tagged in, then I will remove the entry. You'll see price pumps up. We are tagged 411, so we're inside the macro. We've just got tagged into the breaker block at this point. So we now have liquidity just above us. So we're again engineering more liquidity under this area here. So we're looking for a strong reaction now to take that out for a nice 3R TP1. Strong move as soon as we've touched that fair value gap, breaker block entry through the highs. So there we are, risk free, close 80% of the trade off at that point. We then have the relative equal highs coming into 50% of that 15-minute fair value gap. So they would anticipate that to get tapped, which would give us a really nice 5R trade to close out in full. Very quickly after that, we take that level for a really nice 5R. You see 50% is just tabbing that, but look how it's been respected again, 50% of that fair value gap. Bit of consolidation at the high before we get the signal for a short trade coming back down. So that there is your long trade continuation entry after not getting tagged in from the initial setup forming. So I hope you found that useful. If you did, please leave the video a thumbs up. It would really help me out. And likewise, if you are enjoying the content, leave a comment down below. Comments all help with the algorithm, spread the video out to more and more people, which would be fantastic. If you're enjoying the content, please consider subscribing. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.